Good day. This is the Elliott Wave weekly update for the S&P 500, being recorded on Saturday, October the 5th, 2024. I am going to start here on the cash market. I am again on the 3-year weekly chart and just want to review that the market continues to sit at points I believe that could relate or could result in a quick drop of about between 400 and 500 points, maybe a little bit more, or continue the rally and end up closer to, say, 5,900 to 6,000. And the difference being that is it still involved in the minor wave 4, which would suggest the drop down, or is that minor wave 4 complete here and we're in the beginning stages of that minor 5th wave up? In fact, possibly have already gone through minuet wave 1 and minuet wave 2 of that minute 3rd wave going back up. So the way this is set up is if it's going to turn and again head lower. Now this one, even in the cash market here in the S&P, begins to waver between, if we continue to go higher, we're still can be inside this B wave, this minute B wave, but the deeper we drop or the deeper we move higher into that irregular B wave territory, the stronger the other side of the count comes in. We've been here before in these situations where the market tends to get close, gets into over or irregular territory. So it gets over the previous high for in this case, the 3rd wave, and still then turns and fails. And so I'm keeping it alive for that possibility that we may still have a little bit to go up. But I have to tell you, when we start crossing 5,800 in the cash market, I think it starts to shift a lot of what's happening over. And particularly right now, the cash market closed at that spot 5750, where there was a gap. There was a gap left after the end of the quarter expiration. A lot of that gamma came off. That whole 5750 again was the call wall, got totally moved. And so that went, so it created a little bit of a hole. And here the market, the cash market, closes right at it on Friday on a fairly strong rally back up. And the whole thing was based on Friday's employment data, supposedly giving the all clear ahead signal, which I think may have just been misinterpreted, or I'm including it in my analysis, but it's one I would not be so much counting on, because now we're going to begin to tiptoe into 3rd quarter earnings reports, and it starts with the banks. And if I remember correctly, at the end of the 2nd quarter, they didn't report horrible 2nd quarter, but they began to warn about the possibilities of weakening and therefore the possibilities that they won't come in with as much growth or whatever the situation was, but their earnings may start to reflect everything else. And the market may, then not like those earnings. But anyway, we're getting ready to start them. So both counts, based on what I just said, right? If the earnings reports start to come out and they're mediocre, or they're showing that maybe we're heading into the 3rd quarter, so we are going to maybe get a slowdown, or we're not really going to start to see strong interest and everything is truly building on okay, you're going to get all kinds of year-end spitting of stuff here, by the way. And so I think either we stick to the technical picture, if we try to start adding what is seasonal, because actually, speaking of seasonality, it is seasonally a time of the year where equities tend to do well. And what I mean by that, they buy them up because we're moving into year end. And if there have been big hedge funds and big money managers that have been walking long positions, particularly in AI, up into year end, a decision is going to be made as to how far they're going to do, and are they going to carry it forward into 2025 with the same hopes that we continue to rally. Now, either way, My own personal opinion is that yes, we could rally up in this minor wave five. And at the beginning of the earnings or in the mid earnings or even towards the end of the earnings, we could reach a point where all of this holiday or all of this fourth quarter year end type stuff may all come to a head prior to year end. So in other words, they get, don't forget this, like we're working on flows, we're working on how different things are going to be trading. And so options positions can be rolled, can be turned, can be changed dramatically. Don't forget, coming into December, guess what we get again at the end of December, the very last trading day of the year? We get another JP Morgan roll. And hey, didn't we just finish that? It's like we did on September the 30th. Now I'm already ahead. And the market is actually thinking that way too. Are we going to get another rate cut this year? So all of these things are still floating out there, and the market now needs to try to interpret how that can be put into place. We cannot let go of the geopolitical situation at all right now. We cannot let go of the fact that by Monday, in less than a month, and in fact today, 30 days from today, we have an election. A major election here in the United States is being watched by the world. And there will be a reaction one way or the other, but there'll be a buildup of reactions to what people perceive should happen or what they're being told should happen. And that rhetoric is now starting to come out. So there's all these factors. And basically what we're getting is nowhere. We get a little bit up and then we get knocked down. We get a little bit up, we get knocked down, or we get knocked down, or we go sideways, get knocked down, and go sideways and go up. So, and the market is just posturing back and forth. So that keeps us for the last several weeks in the same position where either count that I'm looking at can be put into place easily. So again, I'm looking at the cash market as an ABC, and we just finished a B wave up, and we still have a C wave down within the context of the minor fourth wave. So it's a continuation. Now we are up into irregular. Now the first 1.236 marker is just above, let me just bring this down out of this weekly, just above all of this, come on, at 57.99, so 5,800. So could the market in this fifth wave up to complete that B, the C, minuet C, and to complete the minute B, and then the market is tumbling down. Can that happen pretty quickly? Well, considering that we closed at 57.51, it's less than 100 points. Yeah, it could. And it might just unfold over the next couple of weeks. And there we are, still in the same position. Instead of, okay, we're on to the moon, 6,000 next. Could we get up closer to 6,000? We could, because the next level up on an irregular is 58.79. And yet new highs, new highs, new highs, new highs, new highs. Now here we are, getting ready. So anytime we start popping back above, let me just take this out so I'm not making a fool out of myself. Yeah, anytime we get above 57.65 or that high, let's see what it is there. That is 57.67. When we get above that high, we're in new all-time high territory. We close at 57.51. So we're there, basically. So if the market continues to move higher, our first level is 57.99. And that still then could push the 5 over, the C over, the B over. It all kind of comes in. And still would have the same consequence. So where does it have to go to really just shift the whole thing? It really has to clear 58.80 with a pretty strong advance in tow. But even that, it just flips it from, okay, minor wave 4 is done, 1, 2, 3, 4, and a 5. And in that case, we're still looking 59.67 up to 63 or 6,000. By then I will have 1, 2, this would be a third. We get a fourth coming back in, and then we're running wave 1 to 4 to get our upper level, and we can get up above 6,000, more in line with 6,020, 6,050, etc., all up into that area. And could we do that by year end? Yeah, we could. and still bounce around because we got all these earnings. So it could be an interesting or a declining October, setting the stage for the other. That we drop first down to back below this level, actually, which is 51.19. And we go and we finish minor wave 4. And that would suggest we could go up to here, 5,800, let's say. Cash market goes and plays above 5,800. The futures market gets up to like 58.35, 58, maybe 58.50 on a push. Finds resistance, gets rejection, earnings come out, something changes and rocks the boat. So that's the other point that I want to make right here. Here we're dealing with, we've got this, we have to deal with and put into place all of this bullish talk, all of this everything is fine, the economy is moving great, everything, because that is likely the truth, because we're not doing poorly here. More money is being earned, more money is being spent. So the positive things for the economy based on that still remain. But there are other things that could tip this over. And this could be happening as a buildup to an election, of which the buildup and the upside will be claimed by both parties. So again, we are in the rhetorical, we're in the, rhetorical being the just rhetoric that's going to be being spewed all over the place, up and down these tickets, folks, from cities to counties to states to the Fed. Everybody's got an election going. And so there's a lot of posturing. And the market is trying to interpret it all, put it into a clean, neat picture, and trade. So it truly comes back down to the flows and what's happening in the options. So goes the options, so goes the market. So how and where those options trade, producing where the hedges are going to be set. Is it going to be on the risk on side, or is it going to be on the risk off side? And that's really the decision that I believe is being made on a daily basis based on those levels. And because what I'm witnessing is that as they get broken, we see the moves start, we see them come in. For example, on Friday, initially it wasn't all that great. Vol was sitting high. Then suddenly, as we opened, they started to sell the VIX. And selling the VIX and pulling the volatility in and taking that cash. And you saw that they went after particular equities with the options, and they started to put on the risk on. And I just saw, because suddenly the VIX, as it closes down 80 cents after being up initially. And so, and then we see all the risk on trade happening. The Dow ends up strong. The NASDAQ ends up strong. And a lot of that came at the end of the day. A lot of that came within the last hour, additional hour that's added on after the regular close in New York. So a lot of this was done after the fact, which to me tells me options expiration. It was the Friday. It was an options expiration. Where do things get pinned? How people coming out? Do they really want to be that long or that short? And so they hedge inside the future and also within the stocks, which still trade. So one washes the other, and we've got a whole bunch of activity going on. Options are done, but you got an extra hour to figure out. It's like, oh, look where we are. We're closing here. And so that means come Monday, when I'm able to get back in there, I need to hedge. And if I get to do it now, well, glory be. So it could work two ways. We could get, we get the opposite type of an opening. Something happens and everything starts really heading lower tomorrow. Well, that could then trigger all of this risk on that they've just done. Whoops, risk off. So again, it'll be levels that get tackled in the spiders and the Qs, then the NQ and the NDX and the ES and the SPX. So putting that all together, we're basically still in the same position. So it comes down to how high do we think the market, or how low can the market go? So let's drop down to a 1 hour chart and take a look at the SPX as it was left. You can see it's left up at the highs. This high is 57.65, and actually it's 57.67, but legitimately, and I'll tell you why, if I'm coming over on the line chart, notice that is the day that we hit 57.67. This is the orthodox high because it was also it was created within the bar. So it wasn't the bar closed high at 57.62. So it becomes more the orthodox high for the bar versus here. So I can move it out to there, leaving this in an A, B, and then coming down in a C wave for one hand, right? If we're putting this in, that this finishes this whole thing, 1, 2, we come down, but we're sitting on the cusp of negation. So we still could flip the 3 over, put the 4 maybe down here, and what we're working is the finishing legs of a 5-wave sequence up that we get up to 57 or 5800. There is the other marker, 5828, and that would be, yeah, I took it off, but that would be up there at 1.618 for a 5. And see, we got it right there, at 4 to a 5. And so, but if I'm moving this over to here, it's going to change that number. But outside of that, we have the two, 57.99 and 58.80. So 5,800 and 58.80 as within the irregular stand for the B wave. Now, if it does not get buffed and we come in tomorrow and we come in on Monday and we gap below, we've seen it before, folks. We gap below 57.20, so we gap down through the 8, we gap down through the 20, we gap down through the 50. You see how they're clustered on an hourly chart? We gap down below that. We're heading towards the 2-hourly 200. You can flip this out to the daily and just also see the damage that can be done. And we have the possibility we can flip out of this and flip down below 5,700. Then we're starting on a daily basis to threaten the upward trend that still basically is intact. So taking it back out of this and putting it over, so you can see I'm using all of the tools, and I'm leaving this on a candlestick right now because the bar does present slightly different. It's easier to see the body of the candle here when I'm trying to just figure out what actually took place. Market opened there and slid, not like it stayed up there and traded a whole bunch. Opened and slid. So, and here, opened and slid on Friday. And that was after these great numbers. See, there's so many things, but then look what it did. By the end, it was up above it. The futures market was not. The cash market was. Okay, so in the cash, we just need to be prepared for both, and we have all the levels here. If this by chance is we're going to move this 3 over to here, and this is a 4, or if this is the other side where this is a wave 1 and we're coming into a wave 2, I still think we need to put in another leg down. But if not, then we're going to have to go with that, which actually is not the orthodox. The orthodox is over here on the 3rd of October, and that low is 56.80. Now I'm going to go back to the other. Let's go back to the candle, and we're coming over here to October the 2nd, and that low is 56.74 versus the 3rd, which is 56.77. So it's a little bit lower, so you want to take it, but it's not, the orthodox is here. But both were on a tail. There's just a bigger tail. So, and actually this is the opening on the 2nd. So it went down and then came and went. So again, interesting all the way around in terms of how you want to interpret it. I am encouraging that, because that's the only way I know how, is to remain open. If it's here and we're looking for, let me go all the way out so I can look at my daily CC. That is going, if that is the top of the B wave, what can this C wave look like? And those are these markers right here. So when I bring it back down and you're seeing that 54.26, 54.26, it's for as if this is all we get. And from here, we gap. Okay, that would suggest that the rest comes into play if we're going to continue this rally, which on an hourly chart, yeah, it's there, but they're screaming the strength of the market, the strength of those numbers. It's like, okay, great. I'm going to go with the flows, to be honest with you. And they ended the regular session a little bit more bullish. So often the old adage, the old saying was, is that so how the market has left, the market begins, particularly over a weekend. But hey, we now live in 2024 where, we get to react on Sunday evening to everything. So we could, and we'll see. Now, over in the ES trades a little bit longer, of course. And now here we are. I'm going to go back out. Let's go back out to at least the 4-hour chart and open this up, because now this one I am showing as if we are in the other, right? There's the minor 4, 1, 2, and now we're in the other side. So, and it's important that I do it because both really still carry the weight. So again, this one I've moved over to the 26th. I think maybe it was there all along. And so on the 4-hour chart, we see that that's 4, 1, 2. This is minuet wave 1 of minute wave 3 of minor wave 5. So this is the longest and the strongest part of this minor 5th wave coming in the form of a minute 3rd wave. So that's why it is subdividing, and we would be expecting it to. So I have 1, 2, 3, 4, 5, wave 1, A, B, possibly that's C wave. So I still believe even under a more bullish count, we're likely going to pull back. And you may ask why, and I'll tell you why. If I come over here and I open this up and we're looking at this, if this is wave A, or if this is all going to be A, B, C down to here, I'm going to put a 2 here, then I've got to work this out to be the formation of a 3 of 3 move. And quite frankly, it was 3 up, 3 down, 3 up, 5 down. So it could be 3 down, 3 up, 5 down. It could be an A, B, C. And then what is that? If this is an A and this is a B, and see, we get a little bit into a mess inside of this. So if I need to count this down as A, B, C, B, 1, 2, 3, 4, 5, 5, C, and put a 2 here, this is where it gets cagey, gets stuck. Could be 1, 2, 3, 4. Well, the 4 overlaps. No. A, B, C, A. Or A, B, C, A, B, C, B, A, B, C, A, or X, A again, B, what was that? A C failure? Possibly. So you see the dilemma. Now I can bring it back and I'll look at it this way. I'm going to get a bunch of people that are going to tell me what they think it is, and I think that's great. I love the sharing. By the way, great conversation between Mike Caruana and I believe it's Daniel. Great conversation, you guys. That's the whole purpose of my comment section, to where you guys can talk to each other as well. I'm not the end all to be all here, but there's a lot of great people out there that are doing good work for themselves and sharing it, which is the whole purpose here. So again, while it's here, take a read and see if you agree or disagree. But great conversation, gentlemen. Thank you for including it on my site, my channel. So anyway, I do think this is kind of an ABC down. And this, is that an AB? 1, 2, 3, 4. We're getting into a 5. Very possible. See, a little bit different. When we take a lot of the screaming and crying and carrying on out of it, then we can see it's an A, B, C, A, B, possibly all at once. And then 1, 2, 3, 4. 1, 2, 3, 4, 5. And then we're done. So maybe we do get up closer to high back up like what I say, 58.30. It could be an irregular B, or it's a B and we come down in that C wave like I just suggested. And we go back over here, go back over to here, take this back out. See, this is where I do like the bar chart, and I'll tell you why. Cleans it up, and I can see inside those big bright candles. I know people will say we use the hollow candles, and that way, candle trend. It's just this candle, but then I have to reset something else. Anyway, back to here. So that it's A, and this is a B, and then we're coming down in a C wave, and that leaves us open to come down and test here, 56.83 down to 56.38, taking it back out to the hourly, 4-hour chart, and opening it up so that you can see that goes along with, oops, I changed my colors. So this would fall into, yeah, here, the wave 2. And again, 3A2 is 56.83 and 50% is 56.38. And we put a wave 2 on it, and then we go zip, 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 and we head back up. That'll put us cleaner into the minuet third of the minute third. All right, minuet 3 of the minute 3 of the minor 5. And then we're out here. And then we're looking towards 59.75 to 6,000. We still have in the futures market here, these are, in case this is A and we're still working a B wave, and at least in the futures market, I really do, it starts to diminish a little bit, still possible. But then this would still be a B, and we're working this left of what's left of a fifth wave. So in other words, this comes here, the 3 comes there, the 4 might come down to there. 4 could actually even come down to here, and still we put in this larger move. Right now, 3 and the 4, possibly. But I would keep it to where the 3 and the 4, I don't know. I'd have to wait and see where this ends up. I put the 4 over and then still go up to finish this fifth, to finish 5 of the 3. And that could happen up anywhere in here. Okay. So moving averages, everything else, all in alignment. We've got both sides. We have a lot. We have a lot going on, as I already spoke about. And I think that these things can change. The one thing I will be paying attention to are the flows. And as I said earlier, that where I'm seeing a lot of things is they spread out a little bit towards the end of the week, last week, but everything was getting congested and crowded into a smaller space in terms of price. And then that's starting to fan out a little bit more, but still things can almost seem like they're a little bit backwards, particularly when I'm seeing call walls that are under the market, and like in the NASDAQ. That'll come next. All right, that's going to be it for this one. The next daily update will be on Monday, October the 7th.